All right, good afternoon, everyone. Welcome to CCI Huronia's third fall Lunch and Learn webinar. My name is Sonia Hodis, and I'm one of the many directors at CCI Huronia and a condo lawyer, as well as your moderator today. Today's webinar is going to be about condo insurance, the other pandemic for condos. And as you saw when you came into the room today, you saw our list of sponsors, and I just want to once again thank our sponsors. Without them, we are not able to offer these webinars free of charge to our members. And our sponsors for today's webinar are Ali Associates, Purcell Property Management, Integrity Property Management, FCS Fire Consulting Services, Common Ground Condo Law, and DC Restoration. So thank you once again to all of our sponsors. We do appreciate your support. Who are we? The Canadian Condominium Institute is an independent nonprofit organization formed in 1982. We have chapters from across the country, and in Ontario we have 8 alone. CCI is one of those Ontario chapters and is also the current winner of the National Chapter of the Year Award for Tier 1. So congratulations to the Board of Directors and members of CCI Huronia. We also won the Newsletter of the Year award this year, and that was also, unfortunately I don't have a picture of it today, but that was also awarded at the National Leaders Forum that was held a couple of weeks ago. So congratulations to CCI, it's been a great year for us. Now, CCI's main objective is education. However, CCI also advocates for condos, and we represent condos, all those people that are involved in condos, from owners to directors to professionals, and we encourage all these stakeholders to work together. If you want to experience the benefits of membership and you're not currently a member of CCI, check out one of your local chapters and consider joining today. You can go to the national website, which is cci.ca, to find a chapter near you. If you just click on the chapters tab and then chapter locations, you'll be able to find one in your area. You can also contact your closest chapter to find out about information about membership. In addition, CCI National has the National Resource Center on the national website, cci.ca, which is a great resource for people involved in the condominium industry. There are lots of materials available from across the country relating to condominium issues as well as COVID related issues. So if you would like to access the National Resource Center, you just need to go to the national website, cci.ca, and click on the Resource Center tab. If you would like, you could also just go directly to the CCI Huronia landing page, and there's a link to the Resource Center from our page as well. And don't forget to like CCI Huronia on Facebook. Great place to find out about our upcoming events. And if you are not on our mailing list, make sure you send an email to admin@ccihuronia.com to get on our mailing list to find out about all of our upcoming events. If you've missed any of our previous webinars, you can find recordings of those webinars on our website, ccihuronia.com, under the Resource Content tab. Just a couple of reminders for everyone. If you have called in on your phone or you are watching on your tablet or computer or your smartphone, please make sure that you mute yourself during the session and that you keep your cameras off. This will allow us to get the best recording that we can so that we can make this webinar available for those that weren't able to join us today. This webinar will be recorded and will be available on our website sometime next week. If you have any trouble with the connection, just end the meeting login and log in again. And last resort, if you're having trouble logging in on your computer or your tablet or your smartphone, you can always just call in, and the call-in number is on your confirmation email. We will be taking live questions from our speakers, for our speakers at the end of the webinar. So if you'd like to ask a question live, you can always raise your hand and we will unmute you. If you're on the phone, you can press *9. And as always, you can put your questions in the chat box. We will be monitoring the chat box throughout the webinar and try to get to as many questions as we can. I just want to make everyone aware, especially if you're a condo director, that the information that's being provided today is general information and may not apply to your specific fact situation. So if you are a condo director and you're wanting to use the protection of Section 37 of the Act, you need to get an opinion about your specific fact situation from your own professionals. This webinar is not intended to provide you with opinions that would protect you under Section 37. In addition, because this is being recorded and there will be people who are going to be watching it after today's date, just to make sure everybody understands that the information provided in this webinar is current as of November 20th, 2020. And as things are changing rapidly, the information may not be relevant at a later date. So be sure to check with your professionals to make sure that the information is still current. In addition, we do have some people who are coming from out of province watching us. So just to give you a heads up that any reference to legislation, whether it's the Condo Act or other legislation, is reference to Ontario legislation. So why are we talking about insurance as a pandemic for condos? If you've been watching the headlines, we've seen headlines such as BC's condo insurance premiums shoot up over 780%, rates from $66,000 in 2019 to $588,000 in 2020. Is the condominium industry ready for $500,000 deductibles? Experts warn rising condo insurance premiums may become unsustainable. Thinking of buying a condo in 2020, don't overlook this one key expense. So those are some of the headlines that we've been seeing. And originally, a lot of people were talking about the insurance crisis as a BC problem. But if you tuned into our CCI national webinar on insurance, which is available on the cci.ca website, if you missed it, we had insurance experts from across the country, and the message was very similar from coast to coast. So insurance was a big issue facing condos in 2020, even before COVID hit us. COVID's kind of taken the spotlight for a while, but the insurance issue hasn't gone away. And many condos have by now experienced firsthand the changing insurance climate with drastic rate increases, higher deductibles, trouble getting insurance coverage, and less companies wanting to insure condos. And while Section 99 of the Condominium Act mandates condos to obtain and maintain insurance coverage for standard units and common elements for major perils, it's becoming increasingly difficult for condos to meet this obligation as the costs are continually rising, and this is having a big impact on budgets. So this is a pandemic for condos, and today we have a great group of speakers who are going to give us some insights, suggestions, tips, and their thoughts on how condos can handle this pandemic now and planning for the future. So we have with us Lindsay McNally from CWB Maxim Financial. She's a member of CCI's National Insurance Subcommittee and a newly appointed Vice President of CCI Toronto. So welcome, Lindsay. We also have John Juss, who's a longtime CCI Huronia Director, Reserve Fund Planner, and he is the CCI National Rep on the Insurance Bureau of Canada, IBC Task Force. We have Tom Gallagher, who is no stranger to CCI. He's an insurance broker from Atrans Council, and he has been newly elected to the CCI Golden Horseshoe Board of Directors. Congratulations, Tom. And we have Brian Shriver with us, who's a property manager and owner of ProGuard Property Management based in Collingwood. So Tom, Brian, John, Lindsay, thanks for joining us today. And we are going to start off today with a poll to get to know you a little better. So here's our first poll. We're going to put it up. And we're going to take a couple of minutes to just answer it. First question is, which category best describes you? Unit owner, director, or property management service provider. If you own a condo, which type of condo is applicable to you? Commercial, residential, or both? And if you reside in a residential condo, which type is applicable to you? Townhouse, detached, high-rise, low-rise? And then the fourth question is, are you concerned about insurance affordability? So we've got people coming in. We'll give everybody maybe another 20 seconds, and then we'll end the poll and share the results. Okay, I'm going to end the poll in 5, 4, 3, 2. Get those answers in. Oh, they're coming in. 1. All right, so we have 48% of people are directors, 88% in a residential condo. Most people are coming from a high-rise, low-rise building, 71%, but we do have 21% of people who are in townhouses, and 100% of people are concerned about insurance affordability. So let's see how that compares to some polling questions we asked at the national conference. 98% of those that attended the national conference were concerned about insurance affordability. 34% had difficulty in finding an insurer willing to provide coverage in the last 3 years. And 87% have been impacted by an increase of more than 10% in premiums in the last 3 years. So there's quite a bit of consistency there. And I'm going to pass this over to Tom, who's going to give us a background with respect to the insurance cycle and explain how that impacts why we are where we are now. Tom? Tom, are you able to unmute yourself?
Sorry about that. Sonia likes to be in control when she runs these meetings, so nobody gets out of line. Thanks for that. Yeah, the insurance market is cyclical. And this is one of the unique things about the industry. And if you saw that graphic that was up on the board there, basically the entire market in general, not just insurance for condominium corporations, goes through a cycle, because insurance really is all about a gigantic bucket that all the carriers have, and they need enough premiums in that bucket to pay out all the losses and expenses that they have on a year-to-year basis. And what happens is we go through a period of heavy competition where insurance companies are all trying to undercut each other and really write lots of business in the marketplace because they've got enough money in those buckets. But that happens continuously over time. And then when we get to a period of time where the insurance companies generally, the entire marketplace, none of them have enough money in their buckets. They're paying out more money than what they've collected in those buckets in order to facilitate claims and their expense costs. And then we enter into a hard market cycle. And that's really where we've entered into in the insurance industry right now. And if you see sort of that section there, really in and around that orange arrow right now in the hard market, that's where we've gotten to. And that's had a couple of different results. What insurance companies will do in a hard market, they're going to look at what types of risks they take on during that hard market. So they're going to be more selective in terms of what they're actually willing to insure. They want to insure things that generally are going to make a profit for them and allow them to maintain enough premiums collected in their buckets to pay out those claims. And what that affect those types of classes of business or types of risks that they don't necessarily want to insure, they might start making some decisions on those as well. So what they can do is they can exit the class of business completely. They'll no longer write for that risky class of business. They may decide that they want to reduce how much they write in that class of business. So they're going to offer up less insurance coverage, less capacity. They would take on less of any particular risk, be it a condominium corporation or otherwise. And they also might look at what the insurance companies call sort of rehabilitating a class of business and making sure there's enough premium in that bucket. And by doing things such as increasing premiums, increasing deductibles, and also that selective activity that they do. So that's about the point we are in the marketplace right now. So multiple different classes of business have been impacted, from snow removal contractors to hot tar roofers to restaurants and retail stores. They've all been impacted. Taxi cabs, if you read about some of the challenges that taxis had with their insurance coverage. And condominium corporations, unfortunately, are one of those classes of business as well that have had some struggles with this segment in the market, and they've seen some correction in the marketplace for condominiums.
Thanks, Tom. John, did you want to jump in and talk about IBC?
Yeah, the Insurance Bureau of Canada reached out to many organizations, as Tom mentioned, including the Canadian Condominium Institute, and asked for a member and members to sit on the various task force. So I'm actually on the task force itself, which has also reached out to have many roundtable discussions. We had one in person and then several now virtually, trying to get as many stakeholders to the table to talk about what the real concerns are and how to address them. And there have been some overarching concerns among industries. Condominiums not alone in trying to get insurance. Municipalities are being hard hit. So are transportation industries and hospitality industries. So, when you are in a big bucket, as Tom said, with people who serve alcohol on a regular basis, it's really difficult to compare apples to oranges. But we want to be in that big bucket because that's where we can have the coverage that we need. The IBC Task Force, and I'll talk more in detail about it later, is really focused on trying to get government action, insurers themselves finding solutions, and then in particular for our market, solutions that are particular to condos. And so there's been a lot of good ideas put forward, and we're going to touch on some of those today. Thanks. Over to Lindsay, I think. Yes, to Lindsay.
Thanks so much, John. So good afternoon, everyone. I've been asked to join today to talk about what CCI as an organization is doing in relation to the insurance crisis. So Sonia mentioned when we first started this webinar that CCI is a national organization, and we have 17 chapters across Canada, with 8 of these in Ontario. So we have a really good representation in Ontario with CCI. Now, the insurance crisis itself is not specific to any one region. It's a national issue, and our chapters are coming together through the National Government Relations Insurance Subcommittee to study the issue and to develop education and resources for condo professionals, boards, owners, and government reps. Our national presence gives us the volunteer resources and strength to develop programs and propose solutions. And our members give us the strength in numbers to give weight to the education and advice that we're giving to government reps through this crisis. Our membership nationally is made up of over 4,000 condominium corporations with 335,000 units. So that's pretty significant. Now, the work that we're doing as an organization is not new. We first started in 2003, and that was about the point in time where we found ourselves in the same position in the insurance cycle. And at that point in time, we were really focused on risk analysis and risk management for condominium corporations. And then in 2017, we started seeing a trend of challenges with insurability for condominium corporations. So this past year, we participated in discussions with government reps across the country, which led to those government reps participating as attendees at our webinar in October to learn more about the issue. And one initiative we have been working on is developing a primer that compares insurance legislation across the country. This helps us to understand the issue and provides us with diverse information outside of our provincial insurance legislation. And looking to what other provinces are doing, we can try to solve the issues as it affects us in our province. So for example, in British Columbia, where condos are called stratas, Bill 14 was recently introduced. And the goal of this proposed legislation is to identify when stratas are not able to get insurance coverage, which is a challenge for some Ontario condos, change the minimum required contributions for stratas as it relates to their reserve fund contributions to make sure that they have adequate funding levels to deal with insurance crisis, requiring brokers to disclose the amount of their commissions, and to strengthen notification requirements to these corporations of changes to insurance coverage and costs or any intention not to renew. So it's been proposed as sort of a consumer protection legislation, and we can look to what they're doing in terms of advocating for our condos in Ontario and what legislative reforms might be required. Now, make sure you visit the National Resource Center that Sonia mentioned at the beginning of this webinar to take a look at our comparison chart of these legislations and also to see a recording of the insurance webinar that happened in October. The Resource Center also contains a lot of other helpful information on condominium-specific topics that are published by our experts. I'll put a link to it in the chat in a second. It's CCI National's intention to introduce a survey of our members to collect data on condos as a specific group. So right now, we have a challenge with studying the issue because condos are currently classed with all residential realty, which includes other types of housing. And once we understand the problem specific to condos from an analytic perspective, then we can develop programs in education. What we'll need to do with that data is develop a white paper And we're working on putting together a working group to create a toolbox for our members to better manage their risk and budget for the financial impacts of this crisis. And throughout this, we'll be communicating with members along the way. I'll throw it back to Sonia now.
Thanks, Lindsay. So Tom, John, and Lindsay have given us some sort of little bit of an overview of where we're at, and we're going to get into some more specific issues now. So we're going to launch our next poll, which is about rising insurance premiums. So I'm going to launch that, and the question is, has your condo been impacted by an increase of more than 10% in insurance premiums in 2017, 18, or 19? So far, the yeses are far, far in the lead. Give everybody another 10 seconds or so to get their votes in. All right, I'm going to close the poll in 5 seconds. 4, 3, 2. Those last minute people, get your answers in. We're going to end the poll. And it looks like, share the results, looks like 84% of participants have had an impact in their premiums of more than 10% in 17, 18, or 19. 12% say no, and 5% say they don't know. So when it comes to rising rates, let's talk with Brian, who is right on the ground and has been experiencing this as he helps his condos. Brian?
Thanks, Sonia. Yeah, I mean, over the past 2 years, that's what we've been really experiencing, these spikes in increased rates. We're seeing typically 20 to 40% in increases, and in some cases, even 60 to 65% for some of these condominiums, where they're having these multi-claims histories, where we have numerous claims with these condominiums. Now the insurance companies are looking at these, targeting them, and saying to recover their costs, they need to increase their the premiums. Yeah, it's becoming quite noticeable, and you can see from the survey results as well. 84% there said yes, that they've been impacted. And honestly, every condominium that we manage in the area here, we're seeing over that 10% as well. So yeah, I mean, it's definitely something that is impacting throughout.
Thanks, Brian. Tom, can you help us understand why these rates are rising and what's impacting that rise? Oh, you should be able to unmute yourself. Sorry.
No, for some reason I can't. They usually try and lock me down, or I get out of line. But yeah, no. In terms of rate increases, I mean, really, I guess the question is why are condominiums one of these classes of business, like as John had mentioned, hospitality and other transportation industries that are experiencing sort of more of this impact from the hardening of the insurance marketplace. And while it is a national concern, I do believe Ontario is probably facing a less severe impact than we're seeing, as there's some different, climactic and other exposure issues out in BC and Alberta. But really, I mean, it all comes down to claims and how much money has been left over in that bucket, specifically for condominiums. And although they're a part of sort of the broader class or broader segment of residential realty, the insurance companies do subdivide, and I mean, condominium corporations enjoy likely less than half the amount of premiums that a comparable apartment building would pay. And that's really just because you do have more of that pride of ownership, where you have owners as opposed to renters in the unit. But you do get impacted as a part and parcel of being that class of business. And it's about claims that condominiums generally have experienced. There's sort of the regular losses that happen, unit owner accidents, errors, common element, pipes bursting, different things like that. We've also seen an increase or an uptick in the amount of severe weather incidents that have occurred in Ontario Formerly, we had been sheltered, didn't experience the flooding or the extreme weather that you maybe get on the East Coast or the West Coast. But we have seen a lot more of these severe rainstorms, windstorms, and that type of thing that are happening, a little bit more regularly in the province of Ontario now, and causing some additional impact. More of that money exiting the bucket, basically. And that's why condominiums have been sort of, singled out, or it's one of the classes of business where we're seeing some insurance companies just simply won't write the class of business. They say, we won't write even the squeaky cleanest condominium corporation with 10 years, no claims, and located in the most, flood-free zone and ironclad protection, great property management, all of those details. They don't want to touch any of it. They don't feel that they can make money at it. So with that reduced supply of insurance companies, we have seen that correction in the pricing. And then we've also seen insurance companies underwriting factors that maybe they haven't looked as closely at in the past, in trying to select really those best condominium corporations. So they're certainly looking at claims. So if you've had a lot of claims, as Brian mentioned, you can expect your pricing to go up more significantly than if you haven't experienced claims. They're also looking at specifically where you're located. Are you in a floodplain based on their mapping software? And one of the things that does impact condominium owners as well in the Simcoe and the Huronia area is another thing that insurance companies call a FUS grade, or Fire Underwriter Survey. And that basically just determines how strong is the municipal fire protection that protects your condominium corporation, and how likely is it that if a fire occurs, it's going to potentially spread to a number of units, or it'll be able to be contained more quickly by the municipal fire protection. Those are some of the factors that insurance companies are looking more closely at. So you may not have had any claims, but if they feel that you're susceptible to claims or more risky than other condominium corporations, you may get more of a pricing increase than maybe neighbor or other corporations down the road, or what have you. The other thing that they'll look at, a little more closely in this particular area is rentals. What is the structure? Is it majority owner occupied on the premises, or is there a lot of rentals? Is there a lot of seasonal use of the property? And then they would associate you more with the rating platform that you would get for an apartment or a rental style building, which is significantly higher than condominium corporations. So that's what we're seeing in terms of pricing, and really historically there's been some pretty big discounts that condominium unit owners have enjoyed for their overall insurance coverage. If you take what you pay, the percentage that you pay into your corporation insurance policy, usually maybe $300, $400 annual per unit. And then you add on what you pay for your unit owner's policy, again, usually about $400, maybe $500 annually for your unit owner's policy. $900 annual to protect your entire property per unit owner is significantly less than a homeowner would pay to protect their own home if they were in a non-condominium setup. So you've enjoyed those discounts. Now the insurance companies are looking at, correcting that pricing a little bit and bringing that pricing up.
Just to add on to that, Tom, too, that's exactly what I was going to mention. When you compare the value for what you're getting as a condominium owner, it is significantly lower in price for your premiums than what an individual home is paying. And even with the increases of 20 to 40% on average that we're still seeing a significant savings over what an individual homeowner would pay for this. I'm just going to throw it out there, Tom, just as a question for you. Do you see the premiums continuing to increase?
Well, that's the million-dollar question for sure, Brian. What we've seen, 2019 was sort of the biggest year. I think probably the biggest impact was felt in 2019. Those increases generally for corporations that hadn't suffered claims tended to taper off a little bit in 2020, though they were still, in most cases, double digits, not necessarily as severe as we saw in 2019. Our hope is that that trend is going to continue. The one factor that has complicated the marketplace a little bit is that when the insurance companies collect that bucket of money, they invest it, and they have certain controlled investments, which relatively safe, that they can invest it in, and that's a part of their income. So even if they're paying out maybe a penny more for every dollar they take in, the investments could help balance things out. But unfortunately, because of the extremely low interest rates right now, the insurers are not able to generate very much investment income with those premium dollars. And so a lot of the industry leaders in the insurance companies are predicting this hard market may continue for another 12 to 18 months. But my hope is that we're going to see those increases continue to taper off.
Lindsay, you've been doing a lot of research in this area. What are some things that you are finding people are trying to do or think about to try and battle this premium increase?
Well, there's a suggestion that that has come up, and it keeps coming up. And one of our attendees today actually submitted the question in advance, and that was, I'm paraphrasing, but whether or not it would make sense to set up a captive insurance entity, sometimes also known as a mutual insurance entity. And that's really where a group of condos would pool together to create their own insurance entity and essentially insure themselves. So CCI has looked into this as an option, and it's something that we can continue to explore. But it may not be the right solution for the condo market, because the condo market, it is a higher risk market, especially when you think about water losses and high-rise buildings. The potential for larger claims really is there, and it's relevant. So we could make the problem worse for condos if we started a captive insurance entity, and it really, unless risk management practices improve and we can get that situation under control. The second challenge with creating such an entity is that they would need upfront capital, right? You can't create an insurance entity without putting money in to pay out in the event of a claim. So condo corporations would be restricted from putting their reserve funds into such an investment, because the Condominium Act requires that you only invest your funds in guaranteed certificates, right? As well as that, condos need to be cautious about tying up their reserve funds, which they would need, for major repairs and replacements over time. And so if you put locked an investment into a captive for a long period of time, it might prevent you from being able to carry out your necessary repairs and maintenance, therefore making your building higher risk from an insurance perspective. So it's something that is worth exploring and worth considering as an idea, but it's not, it's not as obvious a solution as people might think it is. And Tom, I think you had some comments on that as well.
Sorry about that. I got to stop muting myself. Yeah, I mean the discussion about captive insurance is an interesting one for sure. And the one thing that I find unique about it, and inevitably people are saying, well, what the insurance companies, I don't agree with them out there. Let's insure ourselves. But I mean, that is essentially what, has been sort of transitioning towards is condominium corporations bearing more risk. And that's in the avenue of them having higher deductibles. So them really having that self-interest to not have claims or repetitive issues occurring, because the insurance companies are pushing those deductibles up. So really forcing the condominiums to bear more risk. And some condominiums are not happy with that. So I'd be surprised that they would want to, initiate a captive insurance company, which really would mean the condominium corporation would bear, and the unit owners would bear a whole heck of a lot more risk than a higher deductible level. So deductibles are certainly one area, and I know we're gonna touch on that, but that's one area where we've seen it evolving, and it's really forcing condominiums to bear a little bit more risk, but not so much on the higher end that if you have $1 million, $2 million, $5 million fire at your complex, you're not going to be talking about serious out-of-pocket costs.
Thanks, Tom. And speaking about deductibles, let's move to the issue of deductibles. So we talked in our last poll about rising premiums. Our next poll is going to be about insurance deductibles and rising deductibles. And let's see where things stand with our audience today. So I'm going to launch the poll. And the first question is, has your condo's insurance deductible increased more than 10% in 2017, 18, or 19? Second question is, what is your current deductible for water loss? 0 to 5,000, 5 to 10, 10 to 25, or over 25, or you just don't know what it is? I'll give everybody about another 10 seconds or so. All right, I'm going to close the poll in 5, 4, 3. Last chance to get your answer in. All right, so here are the results of the poll. So in terms of insurance deductible increases of more than 10% in the last 3 years, 70% of people are saying yes, they've had more than a 10% increase, 13% say no, 17% say they don't know. And then in terms of the deductible for water loss, 37% of people have a deductible in the $10,000 to $25,000 range. We have 17% in the $5,000 to $10,000 range, 11% over 25, 9% under 5, but most interestingly, 26% of people don't know what their deductibles are for water loss. So turning to the issues of deductibles, Brian, what again are you experiencing on the ground when it comes to deductibles, and what are you seeing in our region? You should be able to, yep, you're good.
Yeah, I mean, the deductibles, we're seeing that they're continuing to rise, and the biggest reason for those rises is the water leaks. The water leaks continue to be problems, where we're looking at how to prevent these water leaks from occurring initially. And that's something that is an ongoing battle with condominiums because of the amount of claims that we're just experiencing. So one of the things to note for homeowners, they need to understand their responsibility. Many homeowners don't know what the responsibility is relating to Section 99 of the Act, and that the condominium is responsible for ensuring the condominium common elements, as well as the standard unit, as Sonia had mentioned at the beginning there. So these are things that are contributing to the rising costs because of the fact that all of a sudden now an insurance claim arises from water, and now we're having to do all of these repairs to the interior of units, particularly in stacked townhomes or buildings. You're going to have these multiple claims for several units, and it can get quite expensive. So the insurance companies are looking at it saying, we've got to recover our costs somehow. How are we going to do that? We increase premiums, we increase the deductible, so that way there's less potential for claims. And you can see there that $10,000 to $25,000 is what the average is for those people for your deductible. And that's likely all occurred within the last 2 years. Typically prior to that, it was under $5,000, and we even had some that were even under $1,000. But this has all happened within the last few years. For those that don't know, which was surprising that 26%, one quarter of those here today, just don't know what the deductible is. And the CAO has mandated now that we have to have periodic information certificates sent out. And with that periodic information certificate is the insurance certificate for the condominium. That insurance certificate will include the information relating to the deductibles. So that's something that everyone should be aware of, whoever lives in a condominium.
Thanks, Brian. Tom, the big question, why? Why is this happening?
Yeah, and I mean, really, I think, and again, I work for a brokerage, so we work with the different insurance companies, but the feeling I get from them is really they're pushing, the condominium insurance policy from, unfortunately, in the past, in some cases, being used as a bit of a maintenance policy, to deal with smaller issues. They're sort of pushing that needle a little bit. And forcing corporations to consider their insurance policy more of a catastrophe policy for very large type of losses. So that's why we see those deductibles rising. And it's really pushing condominium corporations to have more skin in the game in terms of their own risk. So, condominium corporations, and it was a great survey to see where deductible levels are at. 10,000, you don't really see many corporation insurance policies with lower than a $10,000 deductible nowadays. And we're starting to see where corporations have had lots of claims activity and unfortunate events occurring. We're seeing deductibles of 50,000, 100,000, in some unique cases even upwards of that, where corporations have had those troubles. And it's basically the insurance companies saying, we don't want to be involved in any of those little claims they've had in the past. We're going to push it up to a level where it is becoming more of a catastrophe policy, or not a policy to be used for this claim and that claim and smaller incidents occurring on the premises.
Thanks, Tom. Lindsay, what's CCI doing in terms of deductibles and trying to help condos address this problem?
Sure, Sonia. So, in the future, CCI is looking to make sure that we change our education practices about how these rising deductibles impact the market. And there really seem to be two major impacts on condominium corporations with respect to rising deductibles. So the first thing that we need to consider is how large deductibles need to change our budgeting practices. So for a number of years, the accepted rule of thumb from a budgetary and surplus perspective was to have 1 to 2 months of your expected operating expenses tucked away from your reserve fund account. So as deductibles increase, condos might need to consider putting more funds aside. A separate contingency for 1 to 2 times the amount of your insurance deductible might become the more accepted best practice, in addition to having that other surplus reserved. But building that balance could be challenging for a lot of condominium corporations when you look at other factors driving increases to your budget, including increasing premiums. So condo corporations need to approach this cautiously to make sure that they're not making their condo fees unaffordable for the individual unit owners. But the secondary issue that condo owners and condo directors need to be made aware of is that with a high deductible, if you have an insurable loss, but you can't make a claim because your deductible is higher than the claim amount, you lose the support of your insurance adjuster. So an insurance adjuster really is your ally in the event that you have a claim, and they work with contractors to manage the scope of work and control costs. Property managers or board members, they may not have the skills to do this, and so they may have to consider looking to outside professionals to make sure that they have the support they need when disaster strikes. So condos really need to look at their own situation and and their insurance deductible, and make sure that losing the support is not going to have a negative impact on your regular operations, right? You want to make sure that you're prepared in the event of a loss, not waiting for it to happen and being reactive. Now, there's one last point I want to make here, and that's really for your individual unit owners. The insurance deductibles for your condominium corporation, they are disclosed to you twice a year through your periodic information certificate. Make sure that you know what your insurance deductible is, and make sure that you have coverage for it in your own insurance policy. If you find yourself in a situation where you're responsible for an insurable loss and the condo corporation is going to charge back the value of the deductible to you, you want to make sure that you have that coverage in place. It could be important for your personal finances. Sonia?
Thanks, Lindsay. Okay, so we've kind of laid the land in terms of what are people experiencing, and we've got some great information and insights from our panel. Let's move towards, what are some things that we can do? So we're going to launch our next poll, and this question is about risk management plans or emergency response plans. And the question is, has your condo developed a risk management plan and or an emergency response plan? Okay, I'll give everybody about another 10 seconds to answer. Five, 4, 3, get your answers in. I'm going to end the poll and share the results. Interestingly, 56% of people have not developed a risk management plan or emergency response plan. Hopefully after you hear from Tom, you might change your mind on this. 20% of people have, and 24% of people don't know. So Tom, what's the benefits of developing such a plan?
Yeah, you know what? It's a great topic. It's something that we're discussing a lot with the professional property management firms that we work with and our boards of directors that we insure. Because a lot of people are asking, and I just had a board meeting last night, and they said, "Well, Tom, what can I do to save on my insurance premiums right now?" And there's not necessarily, there's a couple little things potentially for any particular account, but there's not really a whole lot you can do to save on your premiums right now because we're in this market correction phase. But really, it's about looking forward, looking to the future, and what kind of proactive measures can we take to ensure that over time, as the market corrects, we stay in the best in class range of those condominium corporations. So if the range of premiums is from here to here, you're on the lowest end of those premiums. You've got the most reasonable deductibles because you've managed the risk at your site as best you can. So looking at what is your plan for not only for fire, but also for water damage events. And I mean, a lot of the corporations that do retain the services of professional management firms, you're going to have some built-in plans with them because if something goes wrong, you call them and they know exactly what to do with it. But looking at corporations and different unique exposures, no one condominium corporation is the same as another. And what works for your particular site? What do you do in the event of an impending storm? What do you do in the event of a water damage situation originating inside the unit or coming from outside the unit? What do you do in a fire situation? Not only about safety, but how do we contain those damages? Who do we call? Who are those professionals? And having that detailed list and understanding what you need to do in those scenarios, because it's not, these things are going to happen. Accidents are going to happen. Claim situations are going to happen. And that's what insurance is there for. But it's about reducing the amount of events that could happen to you. And if they do happen, reducing the size and the damage related to those events when they do happen.
Thanks, Tom. John, is IBC, speaking of risk management, is the IBC Task Force addressing this issue at all?
Yes, absolutely. It's definitely top of mind for the Insurance Bureau of Canada to encourage every purchaser of insurance, if they want to control their insurance costs, to demonstrate that they're doing something about their claims. And so they are definitely going at one of the questions in the chat, and Lindsay McNally responded with the IBC website. There's some great statistics there if you want to delve into them. But in a nutshell, they collected in 2018, they collected $60 billion worth of premiums, but paid out $40 billion in claims. I don't think the 2019 stats are up, but if they are, they're recently up. But the IBC Task Force is looking at some very particular points to help manage claims. So from the government side of things, they're asking provincial governments and the National Research Council, who looks after the National Building Code, to amend the codes and land use planning requirements to avoid having large buildings built in risky areas. For example, they're pushing hard in BC to make sure that fewer taller buildings are being built in the high-risk earthquake zones. And they're asking, that the known floodplains of various riverlands are not allowed for new development, including condominium development. They're looking to organizations like us to make sure that there's risk management education available, to the point where they want mandatory risk management education. They point to the model in Ontario and say, every director has to take a simple course online. Maybe that should be a little bit more in-depth course, maybe not online, as to how to get better educated about things like making a claim or avoiding a claim. They also want to educate the insurance representatives themselves on what exactly condominiums and stratas and co-proprietaries are, and make sure that the people selling insurance to these consumers also understand what it is that they need to provide and what the challenges are, as Lindsay's been pointing out. They want to try and develop some sort of collaboration so that better information is shared. I mean, anyone who's tried to do a search on how many condominium corporations there are in a given area knows full well how difficult it is to get that information. Thankfully, CCI and in particular CCI Huronia is working hard on gathering that information. And if you're curious, there's 849 condos in the CCI Huronia catchment area. Providing risk management support where possible. IBC, it's not their job to provide risk management support, but they are looking at producing videos along the lines of, you may have seen the video that says, putting a bar across the steering wheel of your car can reduce your insurance premium. They're looking at trying to develop that kind of information sharing thing and point to various leaders and industry people that can help. And finally, they also want to help frame better education, such as the education delivered by CCI for unit owners, property managers, and various councils, strata councils in BC and condominium corporation boards elsewhere in the land, to really understand the insurance pricing cycle and how to prepare for it and how to reduce their risks and avoid claims. So these are the things IBC is doing. And this stems from the fact that Don Forcheron is the president of the IBC, and he is a former condominium board member. And so he gets it. He sat at the table. He knows how difficult it is to run a condo corp and so on. So he's one of our best allies. And so as long as we can keep that connection going and make it part of their everyday approach at the Insurance Bureau of Canada, and maybe even get our numbers on speed dial for them, then I think we'll enjoy some reduced increases in the future. I think I'm to throw it over to Brian now. I think you have a success story in this regard.
Yeah, I'm going to talk about one of the condominiums that we manage that we've been able to get under control. And it's a small 15-unit condominium corporation in the Collingwood area. They had numerous problems. They had over 10 water leaks, burst pipes in the period of 3 years. So as a result of that, the insurance deductible increased to $25,000. For a 15-unit condominium, this is very substantial, because now every single time there's a water leak, they're paying out from their monthly fees $25,000 every single time there's a claim. And then they're seeing the premiums increase of over 50, I think it was actually closer to 60% increase in the past year in 2019. And that's when the board of directors had to put the brakes on and said, we need to reassess this. We need to figure out how to get this under control. Brought the engineers in, discovered that the pipes had been failing because of the age of them. And so what they did was they special assessed all the homeowners. They actually had an owners meeting explaining everything on this, and they special assessed to replace all of the pipes within the building. So that work actually has just happened within the past year. And so this is something where they've had to implement all of these process procedures and risk management in order to prevent future claims and to halt their deductibles from increasing further to the point that they would no longer be insurable. And they'd become, a 15-unit condominium like this would eventually just become self-insured and wouldn't be putting any claims through and would have to special assess each time that there was a water loss. So.
Thanks, Brian. It'd be interesting if they had done this before the insurance premiums went up, how much they would actually save. But it's a good lesson for other people to perhaps take advantage of. Lindsay, what's CCI doing with respect to this whole topic of risk management?
Well, as I mentioned at the beginning of this session, CCI has been reviewing risk management best practices since 2003. Again, this was the last time we were sort of at this point in the insurance cycle. Right now at CCI Toronto, we've begun working on developing a toolkit for condos to manage their insurance. So this will include help to manage your claims, mitigate risks, budget for insurable losses, and implement smart tools like leak detection systems, disaster plans, and maintenance solutions. And this toolkit, once it's complete, it's going to be available to all members of CCI across the nation. So one thing I want to stress is that this is not a short-term solution to the insurance crisis as a whole, but there is short-term benefit to condos with specific issues with insurability, like Brian was just reviewing. And it's going to be even more important to condos struggling to place policies of insurance, right? If you have a real problem on your hand to the point where you can't get an insurer to place a policy of insurance, a toolkit with short-term risk management solutions can help. So our goal is to improve the market for condos long-term with real implementable solutions. And Brian, I think you had some further tips to share with everybody right now.
Yeah, what I was going to talk about is the preventative maintenance for condominiums, because a lot of the times what happens is the board of a loss occurs and management reports to the board saying that this has occurred, and right away the board saying, well, cover it through insurance. That's no longer the standard protocol. The go-to is insurance anymore, because of the fact that all of these water leaks that are occurring are not always a really high cost claim, and in the $15,000, $20,000, $30,000 range, we're not always going to be running to insurance now because of these deductibles. So what we're looking at is avoiding the claim entirely. How can we avoid claims? And that goes into the preventative maintenance. And what Lindsay had talked about there was leak detection systems. Water is the #1 claim that is that we see in the condominiums that we manage. And I would say in a given year, we're probably at 10 to 15 water leaks that could justifiably be put through as an insurance claim. But the problem you have is that every time you're putting a claim through, there's a potential and likely going to increase your deductibles, and potentially have the insurance increase the premiums as well. So, I mean, these are factors that you have to consider when putting a claim through, and going back to the types of preventative maintenance that could be done to avoid an insurance claim right from the beginning. So a leak detection system and other things that can be done, such as the insurance deductible bylaws and pushing it back onto a homeowner for these types of things.
Thanks, Brian. Speaking of leak detection systems, Tom, do you want to weigh in on that specific issue?
Yeah, for sure. With respect to water damage claims, and again, it depends if you're in a high-rise or a townhome, but water damage is the leading cause of property damage in condominiums, regardless of high-rise or townhome. Probably about 80% of property claims in a high-rise would be related to water damage, probably about 65 to 70 in a townhome, so it's still quite prevalent there as well. So with the rise in deductibles and condominium corporations really having a bit more skin in the game when it comes to risk, it definitely has opened up the discussion about leak detection. And there's a number of different systems and offerings out there, whether it detects, whether it automatically shuts off, whether it notifies, whether it detects water or pressure changes. There's all sorts of different things out there. Again, it's in the past, I think some of the cost of those systems has been a bit prohibitive. But I know the costing has come down, and some more corporations are looking at, does it make sense for us? In condominiums, I don't think you have necessarily one silver bullet that's going to save everybody. But certainly for corporations who maybe are experiencing more than normal leak events, and you may have a higher deductible and you've got more skin in the game on that risk, it might be worthwhile considering that. You know what, could this fit in as a part of our water mitigation plan or our water damage plan? Would it make sense for us from a long-term standpoint? For condominium corporations right now, I'm not aware, the insurance companies aren't offering any discounts necessarily if you do it, but it does go hand in hand with that preventative maintenance that your corporation does, minimizing the amount of claims that you have and really keeping you at best in class. And being able to pay, the lowest premiums of the bunch and have the most favorable deductibles as well.
Thanks, Tom. So let's, we can't have a discussion about insurance without talking about the standard unit. So let's launch our next poll, which is about the standard unit. And the question is, does your condo have a standard unit bylaw schedule to limit replacement costs in the event of an insurable loss? So far, the good news is that most people do have it. We'll give everybody about another 10 seconds or so, and then we'll show the results. All right, another 5 seconds. Get your answers in and close the poll. All right, let's see the results. So we've got 79% of people have a standard unit bylaw or schedule. 15% don't know, and only 5% do not have one. So I'm going to throw this open to the panel. And Lindsay, Brian, or Tom, do you want to start us off on a discussion about the standard unit bylaw and why we need it and why we should make sure we even have one if we don't know?
Well, Sonia, I was hoping that Tom might lead off this portion of the discussion, and we had really great poll results. So it seems like the people attending here today understand the importance of having a standard unit bylaw. But standard unit bylaws, they are a meaningful tool for capping risk and exposure for a condominium corporation. And I think in the market, from the research that I've done, they're still not very well understood and not really being utilized to the best advantage of condos. So Tom, maybe you could give just a brief overview of what the standard unit bylaw even is for our listeners.
For sure. Standard unit bylaws, it's really, really great to see that a lot of corporations out there on this call have got those in place, almost 80%, which is phenomenal. Standard unit bylaw really, as you know, in a condominium corporation, it basically, from an insurance standpoint, works like no-fault insurance. So it doesn't matter who or what causes the loss. It matters whose property is damaged. And so the condominium has a responsibility under Section 99 of the Act to ensure not only the common elements of the condominium, the structural elements, but also a basic level of finishes inside that unit. So the standard unit bylaw is really going to define what that basic level of finishes inside the unit is. And the trend with standard unit bylaws and the value of them from an insurance standpoint is really, limiting that so everybody knows very clearly what is being insured inside the unit. But also there's an opportunity to remove some higher risk finishes inside the unit, risks or finishes rather that are more susceptible to damage, things like flooring, which is a big thing often removed from most standard unit bylaws. And that allows the corporation to be less involved if there is damage to flooring material inside a unit, which again typically drives a big percentage or a high percentage of any of the claim amount of any sort of water damage claims. So if you've got a standard unit bylaw and your flooring is removed, that is really sort of my normal recommendation. Again, for a standard unit bylaw, I always like some sort of balance between what a condominium corporation is responsible to insure and what a unit owner is responsible to insure. Because keep in mind, not only does your condominium corporation policy protect the corporation itself, but it also protects the interest of all the unit owners and all registered mortgagees as well. So it's really protecting the core value of that unit. But by carefully removing certain high-risk items from that bylaw, you can achieve a better balance and less claims on your corporation insurance policy.
Brian,
I'll kick it over.
Yeah, just to add on to that, I mean, really a standard unit from a management perspective, a standard unit description isn't going to really make much change to an individual owner's insurance. What it does is it makes everyone equal for the insurance in the condominium corporation's perspective, but then the individual owners themselves are the ones that are insuring for all those upgrades and betterments and all that. Really what it comes down to is that for the standard unit, you're going to set your bar wherever it is for the standard, and then your homeowner's insurance is going to balance that out too. If you reduce the components within the standard, now what you're doing is you're putting it back on the homeowner. And so it's just a balancing act with those two items. So honestly, for a management perspective of condominiums, what we see is that it's the standard unit is 100% should be done for all condominium corporations, but it's really designed as a tool to manage any claims.
So Tom and Brian, one suggestion that CCI has received from our members is the idea that there should be a legislated standard unit. So where condominium corporations don't have a standard unit bylaw, they would at least have something to fall back on. I mean, the big question is, what should that look like? Should it be bare bones or some other kind of middle ground? What do you think?
Yeah, and I know that was one of the things that was tabled for the Condo Act revision changes that part of which have come through, but still haven't got to that standard unit piece, or that basically that one basic standard unit that'll apply to all corporations if you don't otherwise have one. I mean, my view again, I think for most cases, I prefer, Ryan said, a bit of a balance between what the condominium corporation insures and what a unit owner insures. There's been more discussion about a bare bones bylaw, and basically what that is for folks who haven't heard that term. Essentially, the condominium insures very minimal finishes inside the unit, and each unit owner is responsible then to ensure those as betterments and improvements on their own unit owner's insurance policy. I always provide a little bit of caution to corporations that are looking at that as a strategy, because I do like some common protection for all unit owners under that mandatory corporation policy. Unit owners' policies at this point in time aren't mandatory, unfortunately. And in some cases, with the change in the marketplace, unit owners might not be able to secure coverage for their own particular unit. So if they've got to insure everything inside the unit, all those finishes, drywall, ceiling, cabinetry, cupboards, and all that stuff, that could be cumbersome or difficult for them to do, and they could leave unit owners in a position where they might not be properly protected. At least if you've got some basic protection on the corporation policy or in the corporation's responsibility, the unit owners will be able to sleep at night that they've got that mandatory coverage. And same thing for the financial institutions that are loaning to owners to purchase those units.
Yeah, those are good points, Tom. Now, when I think about this, I compare it to the results from our poll from the national webinar, where at least 3% of, I think we had almost 500 people attending, had insurance deductibles of $250,000 or more. And it seems that that's not really the case much in the Huronia market based on our poll results today, but it is something that could travel up north, so to speak, from Toronto. So if we were to assume that completely redoing the finishes in a condo unit might cost upwards of $100,000, you would need to have at least 2.5 units completely gutted without insurance, to make the risk to the owner outweigh the risk to the condo corporation, or perhaps even the person that might get charged back that high deductible. So, I mean, from my perspective, I think the bare bones standard unit may make sense in the most severe cases at the very least.
Yeah, for sure. And I mean, it's definitely something to discuss with your insurance professional and your corporation solicitor, as well as what's right for your corporation. And that's the beauty of the standard unit bylaw, is that, once 50% plus one vote in favor of it, you can really set that threshold wherever you want, and you can strike that balance as in terms of whatever fits for your corporation. I've worked with, very high end corporations where each of the owners already had, significant amounts of insurance on their particular unit, and a bare bones bylaw made sense for them. So I wouldn't encourage everybody to run out and do that, but it could make sense for your unit, and it is an important topic to bring up with your lawyer and your insurance broker and your property manager as well.
Thanks, Tom. And like everything in condos, it's not one size fits all. It's very unique to every condo situation. Okay, so let's move from standard units to chargebacks. We had a question in the chat box about chargebacks, and so that's actually our next topic. So I'm going to launch our next poll. And the first question is, in your condo, do owners pay the deductible portion of a claim on an insurable loss? Yes, no, or you don't know? And the second question is, does your condo corporation need to prove whether or not the cause of the insurable loss was the owner's act or omission? Yes, no, or you don't know. So let's see where these results take us. All right, give everybody about another 10 minutes. Right now, it looks like about 62% of respondents have owners paying the deductible, and 54% don't know whether the corporation needs to prove whether or not the cause of the insurable loss was the owner's act or omission. Some interesting findings there. All right, so another 5 seconds. Get your answers in. Going to close the poll in 3, 2, 1. All right, so here are our results. In terms of whether owners pay the deductible portion of the claim on an insurable loss, 61% yes, 29% said they don't know, 10% said no. And in terms of the question of does your condo corp need to prove whether or not the cause of the insurable loss was the owner's act or omission, 51% of people don't know the answer to that question, 37% said yes, and 12% said no. So Brian and Tom, do you want to start us off on that discussion about chargebacks and those questions that we posed?
Yeah, I can jump in there. So this relates to this. It's interesting that 51% said don't know, because that relates to exactly what that one comment was about the insurance chargeback, insurance deductible bylaws, what it's referred to as. And that clearly defines whether or not it can be charged back to an individual unit. And what it is it's defined by where the loss occurs. And if that loss occurs within the unit boundaries are defined within the declaration, then the chargeback, regardless if there's negligence or not, would be charged back to that unit owner. And we're seeing this becoming more and more prevalent because of the fact that I would say in the condominiums that we manage, 99% of the water loss claims occur within those unit boundaries. So we're charging that deductible back to the unit owner. And if you think about it, with these rising deductibles, now this $10,000 amount, or in some cases $25,000 amounts, are being charged back to those individual unit owners. And what it's doing is it's causing the unit owners to, one, become aware of the situation, but also it's making them aware of being more cautious with the rising deductible amounts.
That's a great point, Brian. I mean, it speaks to some of the same things that we're seeing not only on the corporation side, but it's all about having skin in the game when it comes to risk. And so, as you know, in a condominium corporation, if Mrs. Jones overflows her bathtub and causes damage to other units or to corporation property, each policy is going to pay for the property it's responsible for. The corporation is not going to go after Mrs. Jones for the total cost of the claim because she caused it or because it originated from within her unit, but they can go after her for up to the deductible amount. And in the Condo Act 105 subsection 2 talks about the corporation's ability to do that. And deductible bylaws have become, a far more common occurrence with corporations right now. And it's basically a bylaw that you pass, very similar to a standard unit bylaw. And it just gives the corporation easier and more streamlined ability to allocate those deductibles to a unit where that loss originates from. There's a couple of little hiccups with the way that the act is worded that creates act or omission, and then we get into proving whether or not it was an act or omission. The lawyers get involved, and we're spending $10,000, $15,000 in legal fees collectively to charge back a $10,000 deductible. No offense, Sonia. But yeah, so that's where these deductible bylaws have come in, and they can be a very useful tool as those deductibles rise to make sure the corporation has that ability and isn't having to pay out of pocket or out of your collective common expenses, and is able to allocate that to a unit owner. And then it just also, the ability to charge that back is there right now. The deductible bylaw just streamlines that process. But it speaks to the importance as well to unit owners to make sure they go out and secure the proper unit owner's coverage. And when they see if your corporation has a $25,000 deductible, you need at least $25,000 of deductible chargeback coverage. If you've got a 10, you need at least 10. If you've got a 50, you need at least 50. So it's something very important to work with your own personal broker on and make sure you're covered. And then everybody is protected. You've got more skin in the game now. You don't want to have to make that claim on your policy. You want to maintain your unit and prevent as best you can something originating from inside your unit.
John, you had sent me a message. You wanted to jump in on this?
Yeah, there was quite a few points in the chat, and I just wanted to accelerate the comments that I was going to make later in the presentation. That to Tom's point about skin in the game, and to Brian's point about preventative maintenance, and Lindsay's point about considering the value and so on. boards would be wise to look closely at their reserve fund minimum balance that they tell their reserve fund planner to carry. Of the last 290 reserve fund studies that we've done, the average closing balance is $1.5 million per corporation. That's many, many, many multiples of most deductibles. And so if you're going to set yourself on a long-term plan as a condominium corporation to avoid making claims and keep yourself in that best of class situation, you should be looking long and hard at whether or not you can do some of the major repairs and replacements as a result of your loss as an expense from reserve. And I think the answer to that is quite likely. Will it have an effect on the reserve? Of course it will. I mean, as soon as you have lower balances as a result of doing something that you weren't expecting, you've got to make up for it. But I put it forward to the people charged with the responsibility of operating these communities that it is a worthwhile discussion to have to see what the best business case is for making those repairs. So that's all I wanted to jump in on there.
Thanks.
Sorry, if I could, Sonia, just add to that. If if you are considering using reserve to make a major repair as a result of an insurable event, you just want to make sure that you are complying with the Act, because reserve funds can only be used for common elements and not for repairs within the unit.
Absolutely. And again, if you are, and if it is a mixed bag, if you've got damages to units and mixed in with the damage to the exterior walls, then you might have some haggling to do with the unit owner. But again, it's a best business case. Yeah, everybody would be able to then look at their various situations and their policies and figure out the best business case. And if it turns out that a $15,000 loss against a $10,000 deductible would make sense, and the homeowner kicks in the $500 that they would have had to anyway to get their stuff fixed, I would suggest that, considering the types of communities we live in, that might be a better solution than the absolute compliance with something that would just cause an awful lot more strife and anxiety in the community.
All right. So before we go on to the next poll, I just had two things I wanted to point out. And there was some discussion in the chat. Owners, Tom, owners can get insurance coverage on their own policy to cover the deductible chargebacks, right?
That's correct, yeah.
So that's something, if you're an owner, you want to make sure you've got that coverage on your policy. And then from the lawyer's perspective, just in terms of the question of whether the corporation has to prove who caused or whether the cause of the damage was an owner's act or omission, at the end of the day, you're going to look to your bylaws to see what that says, because you're either going to rely on the act or you're going to rely on your bylaw. And if you have a bylaw that has a deductible bylaw, and that deals with the chargeback, it's definitely going to be easier for the corporation to charge back if they've dealt with it in a bylaw than relying on the act provisions. So talk to your condo lawyer about that, because there's always big issues and fights about chargebacks. So you want to make sure you've got that good language in your bylaws to make it easier for the corporation to do that. All right, so we're slowly getting to the end of the webinar. So now we are going to put to you guys a question and see how you would deal with this. We've heard a lot from all of our speakers in terms of what the lay of the land is, some suggestions and tips on things we can do. So let's flip the table around, so to speak, and ask you, if you had a $10,000 deductible and a $20,000 loss, what would you do? Would you call your broker and submit a claim ASAP, talk to your broker for advice, or not bother submitting the claim? Well, it's interesting, Tom. Most people are going to talk to you for advice before they do anything. Okay, so another 5 seconds or so, and then we're going to close the poll. Very few people are going to submit a claim ASAP. Okay, another 3, 2, 1. I'm going to end the poll and share the results. So 73% said they would talk to their broker for advice, 24% said they would not submit a claim, and only 2% said that they would submit a claim ASAP. So Tom, do you want to start off the discussion, and then we'll let the rest of the panel jump in?
Yeah, for sure. No, I mean that's great to see, and that's something that we strongly encourage in our office as well. A property claim you technically have up to, really up to a year in many cases with residential condominiums, 2 years to actually submit a property claim. Though it becomes more difficult if you wait a year or 2 years to do it. So you don't have an obligation to submit that property claim right away. And with the change in the marketplace and this re-underwriting or more vigorous underwriting that insurance companies are doing, especially based on loss histories of clients, we do strongly recommend, you know what, if you have something that's on that threshold, the 2 to 3 times your deductible amount, you call and you discuss that with your broker first. Your broker is going to be able to look at your previous loss history, be able to look at the nature of the insurance companies that are insuring the account, and make a recommendation to you on what the corporation should do. And that's really the type of risk attitude that I know John had mentioned around claims avoidance and some of the things that the Insurance Bureau are talking about. And it's really about skin in the game and taking care of some of those more maintenance type items that are not extreme cost burden to the corporation. So it's quite comforting to see that people are of that mindset. In some cases, it may make sense to submit a claim. In some cases, it may not for that scenario. Given again, there's no one size fits all for each condo. It'll be dependent on your own unique circumstances. Pass it over to somebody else in the panel.
John or Brian?
Yeah, I'll jump in there. We actually ended up having a situation occur where it was those similar dollar amounts, a $20,000 claim, $10,000 deductible. The condominium corporation, the board of directors, did decide to go through with an insurance claim, which we actually had advised them not to, but that was their decision to make. And it was interesting that they did that, though, because this is going to go back to one of the comments that went into the chat here. Was Joanne Duff was asking about the toilet leak from Unit A to Unit B if there's no standard unit bylaw. And this condominium corporation does not have a standard unit bylaw, does not have an insurance deductible bylaw. And as a result, the delays in getting everything finalized were astronomical. The claim occurred in September, 2 months ago, and we're still waiting on quotes. It's 2 months, and the homeowners are contacting us on a weekly basis, asking us for updates, and we're very frustrated with the situation just because of the fact that we've had so many delays because there's no documents in place. And so for something like this, we always recommend that if you don't have a standard unit bylaw, if you don't have an insurance deductible bylaw, get them in place, recommend them to your board of directors, have the board of directors work with your solicitor to get that set up.
John, anything further to add?
Yeah, the damage from one unit to another where it's only unit owner's property that's being damaged is a very difficult, solution, because of all the complexities in there. And it's unfortunate that we're still waiting in that particular case. But if the loss were to involve common elements, then I would suggest that at multiples of 2 and 3 times deductible, that the corporation take it into their own hands and parse out as much as possible what the common element costs are and cover those as a major repair replacement out of reserve, and then negotiate with the 2 unit owners involved on what is it that they would have had to pay out anyway. They might have $1,000 deductibles that they would have to pay to their insurance company anyway. And in Brian's case, it's too late. The claim's been made. But sit down and make that business case rapidly. Call a special meeting of the board and get all the facts on the table and say, okay, here's what looks like the best business case for us. And then talk to your insurance professional and say, we're thinking about doing it this way. Have we misread the tea leaves at all? And take the bull by the horns. Get these things solved sooner rather than later, because it is frustrating for homeowners to sit and wait for their bathroom to be repaired.
Lindsay, anything you want to add?
So, I would just add that I think generally those in attendance that answered the poll and said that they should reach out to their broker for advice, I think that that's the correct approach. And I think that these decisions are getting harder and harder as the dollar values of the deductible get larger and larger, right? The bigger, the risk from a financial perspective, the harder it is for a condo board to make those determinations. And to talk about Tom's comments about, rising deductibles and how, insurers are really doing that on purpose to force you to manage your claims. So it's really by design. I would say that those of you who are listening today about where I was talking about changing your budgeting practices to make sure that you have some money set aside in contingency to deal with these types of situations, I think that makes the decision a lot easier. And it gives you the tools to better manage your policy with your broker's advice. So make sure you consider that.
Okay, thanks.
And just one additional thing as well, and I know Lindsay had brought it up earlier, is that sometimes corporations are concerned about not submitting a claim because, as Lindsay said, they don't then have the benefit of the insurance adjuster for the corporation sorting out who is responsible for what. If you work with a brokerage that specializes in condominium insurance, and also if you work with a restoration contractor that specializes in condominium and insurance type of work, they can simplify that process for you so that you as a corporation aren't taking on or biting off more than you're supposed to in terms of repairs and costs that you're going to incur if you do choose to retain that claim yourself. So it is important to surround yourself with those proper professionals that understand, from management to insurance broker to restoration contractors that specialize in that, and they're able to help you through that process when you don't have the benefit of that insurance adjuster if you're deciding to retain and not claim under your policy.
Thanks, Tom. Those are really good points. We're almost at the end, but I did have a question come to me. I'm going to throw it out to the panel, and feel free to jump in. So the question was, the term preventative maintenance, can someone expand on this? And is this within the individual unit or on the common elements or both? And what is the role of the superintendent in preventative maintenance? So who wants to jump on that one?
I can start if you like.
Oh, sorry, go ahead, John.
So preventive maintenance is the type of work that prolongs the life expectancy of a given element, whatever it might be. We all like to have clean windows because we want to see out of them, but cleaning windows helps keep a longer life of the windows, and so on, all down the list of all the various things that make up your units and your common elements. So doing that is important, and it is both unit owner and condominium corporation's responsibility, and you have budgets for doing that and so on. The superintendent themselves, as an employee of the corporation, is primarily responsible for the common elements, but they're going to have an impact on helping you do the right thing and pointing out to you that don't leave the leaves lying up against your sliding glass door of your balcony. Please sweep that off so that the threshold lasts that little bit longer, and those sorts of things. But it's the day-to-day things that you can do that are relatively simple, practically no cost, a bit of elbow grease, and helps the building last longer. Over to you, Lindsay.
Thanks, John. The point that I wanted to make about preventative maintenance, it's not just about extending the life cycle of a building component, although that is an important reason to do it. The other reason that I think is important is that it gives you visibility about what things might break down soon, right? If I think of a townhouse, it's very rare that you would, on a normal inspection, go up on the roofs and take a look. But if you did do that, you might find that you have some loose shingles that could create an issue in the event that we had another windstorm in Ontario, which have become so common in the last few years. Individual unit owners, when you're in your bathroom, take a look at the braided rope, the braided line, supply line on your toilets, and make sure that doesn't have a small drip and that it's properly secured, because that's a really common source of major water losses in high-rise buildings. So preventative maintenance, from my perspective, it's everyone's responsibility, and it's really important that you make sure you put eyes on your equipment to prevent losses.
Just to that point, there are many, many services now available at a greatly reduced rate. It used to be simply out of a condominium corporation's purview to think about getting a drone survey of their roofs, but now it's become commonplace, and they can be done for as little as $2,000. So, you get a drone survey, you don't have to have a person walking on the roof. You can actually have a quick look and see if there are any loose shingles. you could do a quick thermographic survey of the exterior walls to see if any insulation has been displaced or if there's, a concealed water leak that hasn't manifested itself yet. These are all services now available quite commonly to the condominium marketplace that most property managers, can make arrangements for on a very quick basis.
Tom or Brian, anything you want to add to that before we wrap up?
Yeah, I can add to that. I mean, when it comes to preventative maintenance, in the property management industry, that's what we're doing. We're doing the preventative maintenance, but we're looking at options and increasing the amount of preventative maintenance, such as the water leak systems, so that if there's all of a sudden a burst pipe, we're seeing the an alarm go off to let us know that this is going to stop those claims from occurring. And it could be anything from a lamppost that isn't bright enough, or anything, a trip hazard that needs to be repaired right away. What it comes down to, I mean, preventative maintenance can mean so many different things, that we're doing everything we can, and we're looking at options to increase the amount of preventative maintenance items to reduce the potential for claims.
Tom, last word on preventative maintenance?
Yeah, I think, in terms of the division, whether it's corporation responsibility or unit owner responsibility, I mean, as you know, something can originate from a unit and cause damage to corporation common elements or property the corporation is responsible to repair. So I think, corporations initiating programs for unit owners, look at water appliances, changing the feed hoses to braided connectors on those if they're not already done, making sure those are in good working condition, dryer vent clean out programs in corporations. Out in BC, where the condo insurance, I would say, is more of a crisis than it is here, they've even gone as far as passing maintenance bylaws, which actually command that unit owners do certain maintenance items in order to make sure that they don't have any additional claims, because they've got $250,000 deductibles and they're on the hook. They've got a ton of skin in the game at some of these corporations. So, doing that stuff proactively, you never want to do something when an insurance company is forcing you to, because likely you're going to have just exorbitant terms on your insurance policy at that point in time. But sort of taking those steps proactively and doing it in conjunction. I mean, the corporation is made up of the unit owners. So not only corporate building-wide initiatives, but also unit owner initiatives and getting unit owners on board with that. I think it can be very beneficial for a corporation in the long term.
Thanks, Tom. And thanks to everyone on the panel. I mean, we're going to have a follow-up insurance webinar probably next year sometime, because we could talk about insurance for hours and hours and hours, and because it has a big impact on condos in all areas of dealing with condos. But I want to thank the panel, Tom, John, Brian, and Lindsay. Thank you for joining us today and talking about insurance and giving us a lot of great insights and tips on how we can deal with this. I'd also like to thank our sponsors, Aaliyah Associates, DC Restoration, Purcell Property Management, Integrity Property Management, FCS Fire Consulting, and Common Ground Condo Law. As I said at the beginning, without the support of our sponsors, we're not able to continue to offer these webinars free of charge. And so on behalf of CCI Huronia and our members, thank you very much for your sponsorship and for your support of what we're trying to do. So that takes us to the end of the webinar, and we are going to have our last webinar for the year is coming up on December 11th, and it's going to be about maintenance and repair, how appropriate. We were just talking about preventative maintenance. So join us next month on December 11th at 12 o'clock when we discuss maintenance and repair. You can go to the CCIHuronia.com website to register online. As I indicated at the beginning, a copy of today's webinar will be posted next week on our website. And if you have not joined us on Facebook, please do so. And if you'd like to get onto our email list and find out about our upcoming events, contact admin at CCIHuronia.com and ask to be added to the list. In terms of other events at our other sister chapters in Ontario, CCI Golden Horseshoe is having their condo talk on November 24th. It is part 2 of the expansion of CAP Powers. You can go to cci-ghc.ca to register. CCI Toronto on November 25th is having a webinar on COVID-19 and the condo climate, coping with the stress of it all. You can go to ccitoronto.org to register. CCI Grand River has started their conference today. It goes today and tomorrow. So if you still would like to participate, you can contact them at cci-grc.ca and find out if there's still room to join. CCI Eastern Ontario is doing their 4th part of their director's course on November 26th. Go to cci-easternontario.ca for more information. And don't forget, I hope to see all of you on December 11th when we talk about maintenance and repairs. Until next time, I'm Sonia Hodis, and from the entire CCI family to yours, wishing you a great weekend. Hope to see you next month. And don't forget that CCI is your condo connection.